In today's episode, we're going to be talking about the two most essential and kind of confusing terms in day trading, pips and lots. Okay, let's start with pips. You might be asking, what is a pip? I have explained it in a previous episode, but not in too much depth. A pip stands for percentage in point, or price interest point. All it really means is the smallest price movement a currency can make. Most currency pairs, a pip is the fourth decimal place. So, if the Euro USD moves from 1.0001 to 1.0002, it's moved 1 pip. But here's the confusing bit. For traders looking to trade the Japanese yen, like USD JPY, a pip is the second decimal point. So if USD JPY moves from 100.01 to 100.02, then that's also moved a pip. So why do traders care so much about them? Pips are how we measure the price movement on charts. And that's how we calculate the profits or losses of our trades. For example, let's say you buy Euro USD at 1.0000 and it goes up to 1.0020, you've just made 20 pips. If you're trading with one lot, which we'll get into in a minute, you've made a £200 profit. Or if it goes down by 20 pip, you've just made a £200 loss. Okay, so you've just heard me say lots as if it was a normal term. What are they? A lot is how we measure the size of a trade. It's like buying in bulk. You're not just buying one set of one currency, you're buying lots of it. There are three main types of lots. There's a standard lot, a mini lot, and a micro lot. A standard lot is 100,000 units of the base currency. The base currency is the first currency in a pair. So Euro USD, the base currency is Euro. So 100,000 euros would be a standard lot. A mini lot is 10,000 units, which is 10,000 euros in Euro USD. And a micro lot is 1,000 units. So for example, if you're trading with Euro USD on one standard lot, you're trading with 100,000 euros as capital. However, don't panic. Due to leverage, which is what I explained in the previous video, you don't need 100,000 euros in your portfolio to trade with one standard lot. So this is where it comes together. Pips and lots go hand in hand to measure your profits or your losses. The value of one pip depends on the size lot you use. The formula for the value of a pip is 1 pip divided by the exchange rate times the lot size. So for one standard lot, 1 pip is usually worth $10. For a mini lot, 1 pip is usually worth $1, and for a micro lot, 1 pip is normally worth 10p. Now let's hop off the chart quickly to go onto a pip calculator. This is a really simple way to calculate your profits or losses without doing any mental arithmetic or writing it down on paper. As you can see here, on the top section it writes down the pip amount. So this will be how much movement you're looking to get out of a trade. So if you want your trade to move 20 pips, you write 20 in the top. Then you go to the currency pair. This will be the currency pair you're trading in. Let's keep it to Euro USD for now to keep things simple. And this is the trade size you'll be using, which is how many lots you've got. Now this is based off how many standard lots. So if you're using a mini lot, it's 0.1 lots, and if it's a micro lot, it's 0.01. And then, lastly, it's the deposit currency you're trading with. Now this isn't the base currency that you're trading with in Euro USD. This is the currency you're using to fund your trading account. So in the UK, you'd be using pounds. In Germany, it's euros. In America, it's USD. So let's change this to pounds. So as you can see here, trading 20 pips with one micro lot would receive £1.60 in profit. Whereas if you change that to one mini lot, you'd be earning £16.20p. Whereas if you change it to a full-size lot, your profits will be £162.12p. So now you can see where lots and pips go hand in hand. Before we wrap things up, here are 3 simple tips you can use to improve your trading using lots and pips. The biggest piece of advice I'd give was to start on a demo account. This lets you calculate using pips and lots without any risk to yourself. From that, start small on a real account. Trade micro lots to begin with, even if you have the capital or the leverage to trade bigger lots. This will help you master pips and lots with confidence. And lastly, use the tools provided. Most trading platforms calculate pip values for you without you having to do any of the legwork. So I'd recommend using that along with these other programs and websites to help you calculate the pips. That way, you're not adding any extra confusion when you should be focusing on your trading. Trust me, understanding pips and lots, even if you don't use them in day-to-day trading and let the trading platforms calculate it for you, will help you improve your trading and become more profitable, purely because you understand the logistics behind your trading. That'll be all for this episode, and as always, stay sharp. I'll see you tomorrow.